All right, guys. Good day. Welcome back to my channel. Um, Today we are going to be doing something very straight, simple. We're going to be talking about how to spot other blogs. Right? How to spot other blogs. So if you are new to this channel, please kindly subscribe, like, comment. Tell us what you want us to improve. Tell us what you want us to, the video want us to do next, and we'll get it done. All right. I know most importantly what need to be improved is our audio quality. All right. But then we are working on it. All right. We are working on it and we are trusting that it will be fixed very soon. All right. So then without wasting much of our time, we're going to be demonstrating our tutorials for today. So we're talking about order block. All right. We all have been hearing order block is part of a trading strategy that works very well. All right, that works very well. So other blocks is actually when banks these like when banks are selling, sorry guys, when banks are selling, it is the ideology behind it is that it is believed that banks leave some orders behind and then for them to be tapped into later on. All right, so that's the ideology. And then we have two kinds of order blocks. We have the buy order block and the sell order block. Okay, so the sell order block normally occur in an uptrend. All right, after a break of structure upward, occurs in an uptrend after a break of structure upward, and then the sell order block occurs downtrend after a BMS, like a break of market structure downward. All right, so that is just how it is. All right, guys, so let's go straight to the point now. A sell order block is actually the last bullish candle that leads to a break of structure. A sell order block is actually the last bullish candle that led to a break of market structure. BMS. All right, BMS. So let's consider this. Let's see. But before we do that, let me tell us one the qualities of a good order block. The qualities of a good order block. Right? When you look at the market, there are a lot of sorry guys, there are a lot of other blocks in the market, but there are some that if you look at it, they don't play out actually. All right, they don't play out. So one of the qualities of a good order block is that it must break market structure. It must have a BMS. All right, there must be a BMS. If it doesn't have a BMS, then it is not a valid order block. All right, it's not a valid order block. So secondly, there must be liquidity. What is liquidity? Liquidity is actually money in the market. All these highs and these lows you are seeing, highs and these lows you are seeing, they are all money hanging in those places. So what is actually liquidity? Liquidity are just stop loss. Mostly when you are buying or when you are selling, you place your stop loss above the recent high. All right. So liquidity is in this area that you are seeing, while liquidity is here as well. So when you are buying, you place a stop loss below the recent low. All right. So that is just so there must be liquidity. But remember, the major thing is that this other one are just additional. Even if it doesn't meet up, you can still go with it. But the major thing is that it must break structure, upward or downward, whichever way. There must be a market break of structure. All right. Then the third one is that we would love to see an inducement. All right, just like a ranging kind of uh, a kind of uh, luring people to believe that okay, this market is actually selling when you know that this market is actually not selling. All right, there should be an inducement. There should be an inducement. Then there must be an impulsive move before the break of market structure. But remember, I repeat it again, all these ones are not really necessary. The major thing is that you must break market what? Structure. That is BMS. So let's consider this now. Let's consider this one now. Let's see. So, but this is our, let's see if it is valid. It's big. Okay. So the reason why I consider this is because number one, this is for practice sake, all right? Just for us to get that. Number one, this a high, this another, this a low, right? And then this is a high. So what do you see here? Is a break of market structure here. All right, it's a break of market structure there. All right, there's a break of market structure upward. So number one, it must break what? Structure. And it is the last bullish candle that led to this break of structure. The last candle that led to this break of structure is actually this one. So we map it out. So what are we expecting? We are expecting that price should go this way and then tap into our order block. Remember, our stop loss should be above this. And guys, there's something I just remember. There are two kinds of entry in order block. We have instant execution and confirmation entry. Instant execution is the one you use sell limit order. You place it here or anywhere. You use sell limit order. As soon as it touches it, the order is executed. All right, the order is executed, and then the order starts playing out. But confirmatory entry is that you will wait for confirmation, because sometimes this order block you are seeing now, the liquidity now, it might come here trying to tell people, lie to people that the market is about to sell. Maybe from here you see the market has been selling. So it can come here and clear the liquidity in this area before it starts selling. So confirmation entry for me is what I use most of the time, depending on the structure. All right. So it came here. So this is what we are expecting, right? That when it taps in this other block now, it will it will come down. All right. So this is what we are expecting. That the market should tap into our other block and then we sell. All right. So that is just it. It's as simple as this. It's as simple as it. If you watch this video and then practice it, you will discover that the major thing is that you must try to spot the other block itself and make sure that it breaks what structure. That is it. All right. So let's check. Let me show you the one I entered. Okay, this one. All right. If you check here now, this we are all talking about. We are now talking about the sell order block, right? So the market came here. Okay, and there is a break of structure here, right? Candle close, right? It's a break of structure. So you see, there's a break of structure here. It's a break of market structure. See it. So we wait, and then the market came down, and then tap into our order block, clear liquidity. Are you seeing what is happening there? It cleared liquidity along this area here. Are you seeing that week? He cleared liquidity. He manipulated people thinking that the market is buying. He cleared liquidity before coming down. You see what is happening? So you see where we place our stop loss above this. So it was unable to take us out. So many people place their stop loss at this place here. The market would have taken them out and then before coming down. So the market came down. He went here and then he went all the way into our take profit and then we close. I see what the market did. So this is just the sell order block. Now let's see this other one. All right, you see this one now. I'm not really sure it will play out. From what we are seeing now, it is not playing out. Okay, so other block is valid. Other blocks can, you know, um, can be accurate, but then sometimes it may not. You understand? Sometimes they are the ones that will not play out and all of that. All right. So, but the overall trend of this market is um, from the higher time frame is downtrend. Okay, but let's see how it goes. Let's see how it goes. I've not really entered this trade. I just did my analysis and I was just waiting. Okay, I was just waiting. So, but let's go and look for a buy order block. A buy order block. Let's okay. So there's a break of structure here, right? We check here. There's a break of structure here. All right. So I think this is the last candle that led to that break of structure. But this one is not. So just map. But there's what we call Fibonacci retracement. But I will not be covering it in this video because I want this video to be as short as possible. There's what we call Fibonacci retracement. That is when you talk about um, uh, premium and discount, right? But it is not part of our scope. Let's see. Let's see if we can find a buy order block. Guys, we're still finding our buy order block, the one that actually played out. Okay, I think let's check this one. This one. So this is the last. Okay. All right. So you see, there's a break of structure. It's a break of, the market was actually an uptrend. It's a break of structure here, and then what are we expecting? We're expecting that this market should go up. All right. Tap into our order block. All right, and then buy. One thing about the market is that it is not how long it moves. It is not how long it moves. All right. Let if the market moves from here, let's say you enter from this place now, it moves from here to here. Depending on your lot size and the account size, you would have made some money in this little move you are seeing here. So let's check another one. Let's check another one. Remember, your stop loss must be placed below it. You see, there's liquidity hunt here. Are you seeing what is happening? This liquidity hunt here. He cleared, if there is any stop loss that is in this place, he cleared it before he went up. All right. There's another one here. Let's this one. Let's see if it plays out. Let's see. No, it was not valid. If you are checking now, you'll still be seeing a sell order block. Still checking, guys. Let's just see one valid. We're just using this time frame for instance. Alright. Wow. think we see now. See, it broke structure. It's a break of structure here. See it here. And this is the last candle that led to the break of structure. So we map it up. All right. So this is a valid one. Are you seeing? So what did the market do here? It came, tapped into our order block, cleared liquidity, cleared liquidity. See what is happening. He cleared it. He was even looking as if it will not buy. He cleared. He made sure that he wiped everything in this place. See up to this point, he wiped everybody in this place. So if your stop loss is in this place now, you are already out of the market. There is no need. You are out. Before now, see impulsive movement. See what is happening, guys. Imagine imagine the amount of money. Imagine, 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 guys. Imagine. In fact, this is the highest point. Sef. Are you seeing? Are you seeing that this other block played out very well? Are you seeing? So one thing you have to note is that you must be strategic in placing your stop loss. Are you seeing what is happening? So the first criteria was met. It broke structure downward. All right, it broke structure downward, and we must see liquidity, and we must see inducement. All right, we saw inducement and this liquidity now. He cleared it. He cleared everybody here. He cleared everybody. Now, at this place, now people might be thinking that okay, we are now buying now. We are now buying. So it manipulated them. Meanwhile, the banks has actually placed. They have actually placed leave an order in this place, and the market start. You see, impulsive. You see this big candle. It is the bank, like the high financial institution, all right, that create this kind of moves. Now, I see there's an inducement line, and then it moves. He cleared the stop loss. Say, you know that okay, people might be placing their stop loss in this area. He cleared the stop loss in this area before now coming down. Now people now saw okay, I think there is a pullback because after a break of structure, all right, after a break of structure, there is always a pullback. Okay, so the pullback, people might be thinking that okay, the pullback is over, the upward movement is over, so there is now the downward pullback. Very well, very well. So he pulled back. They forgot that he's now pulling back into this order here that was left behind. He now pulled back into this area. Now, you see. So he now came because his major aim is to buy. He now came, cleared this whole liquidity in this area, haunted them so that they can have peace of mind. They can have their own time to do whatever they want to do in the market. If they tell you how much that is in this place, you will not believe. He cleared it. He cleared it completely. This one is even a wicked liquidity hunt. He cleared it now. Now move. He now move. So let's say now. Let's say now. Okay. So you place a stop loss here. Let's say you place a stop loss here, and then the market now sold to this extent. Jesus. See. He sold to that extent. Are you seeing the movement? He cleared people here. So your stop loss should be should be very, very strategic in your stop loss. Are you seeing what is happening here, guys? Are you seeing money that people made in this place? So that is it. That is it. These are OB, this BMS, this liquidity, inducement. is our other block, and it played out. Remember, most times it will not play out. Yeah, it will not play out most times. So guys, this is just what I wanted to share with us today. I believe it will give you an insight to some certain things that. So please, if you love the video and it has helped you answered some questions that has been troubling you, please and please and please subscribe. Please, I beg us, please subscribe, like, and share. Comment anything you wish to for us to make a video on. Please and please show us, and we will definitely get it done. Please subscribe. This is just a little channel that is building up. Please support the channel by subscribing and liking and sharing. Thank you so much. See you some other time.